I'm Edward Lawrence in Harrisonburg, Virginia at the Richmond Federal Reserve sponsored conference called Investing in Rural America. Joining me a very special guest, the president of the Richmond Federal Reserve, Thomas Barkin. Thank you for joining us on this. The consumer spending, are you seeing it not just in the big towns, but also the rural America?
I am. As long as folks have jobs, I see them spending. And in a positive sense, they've also got savings. Savings rates are much higher than they were 10 years ago. They got access to credit. And for the most part, they've got confidence that the economy is going to continue to thrive.
Where is your view going forward about the federal funds rate? Are we near neutral? Are we at neutral? Above neutral?
As you know, there's a very wide range of neutral. And one of the things I've found just as a business person getting into this is that the standard error around neutral is actually bigger than most people's range. And so I don't know that I can get it that precisely. What I do look at is our transmission vehicles. And our transmission is lending rates, and you can look particularly at housing and at autos. Both of those seem to be thriving right now, and that makes me think that if anything right now, we're somewhat accommodative.
So going forward, how does this uncertainty play into this economy? Is it dragging it down? Do you see this as a major headwind? We're talking about trade uncertainty first.
We'll see whether it does. I do think it's a real headwind, particularly these days on the business side. If you're a business person and you're trying to make a decision about whether to grow your business, whether to build a plant, you'd really like the conditions to be stable. You'd like to make a decision and know what the rules of the game are. Today, you don't know whether you should move your operation out of China or even Mexico, or whether you should keep it. And that uncertainty is very frustrating to most businesses.
Does the uncertainty also seep down into rural America, into small Main Street towns?
Well, so you have to watch carefully what happens to consumers. Consumer confidence in the most recent readings has been somewhat down. Consumer spending in the last month looked a little bit down, so I'm watching that very carefully. We saw in the first couple months of this year, in the middle of market turmoil, government shutdown, we saw consumer confidence drop, we saw consumer spending drop. We may be about to see something like that, we'll see. On the other hand, we bounced back very strongly. March, April, May, we might bounce back very strongly now.
Do you think the manufacturing data that we recently got is an outlier? We've heard some folks that maybe this might not be a true representation that we're actually slowing down this much.
Oh, I think the manufacturing sector has slowed down, so I don't question the data at all. Remember, it's 8.5% of the economy, so that's an 8.5% of the economy slowdown, and so we'll see whether that does spread to the rest of the economy.
Talk about the balance sheet just quickly. In balance sheet was, in 2007, was $870 billion, 4.5 trillion now. Do you think it's too large, too small? Or it went up to 4.5 trillion, now I think it's a 4.2. Is that balance sheet where it needs to be in order to handle liquidity?
So the most important number to think here is bank reserves. That's what we focus on. The rest of the balance sheet is money held by Treasury or as currency in circulation. Bank reserves, we increased significantly at the beginning of the crisis. We've taken it down well over 60% since then, and we are trying to find what is the minimum level of reserves to operate monetary policy. As evidenced from some issues we had in the Fed funds rate last week, I think we're probably pretty close to that.
So when then should the balance sheet organically grow? Do you think some of the Fed presidents are saying maybe it should be earlier, some say later, towards the end of the year? When do you see that start to grow?
Well, I think we're at a moment right now where we've got to start looking at it. The way I think about it is this. We've been draining water out of the lake in an effort to find the minimum level of reserves. We found last week the first rock, right? And so now the question we're trying to dig into is this a rock we can just navigate around, or do we need to put a little bit more water in the lake? And I think that's a topic that's very important for us to get into quickly.
How do you feel about it? Do you see that this short-term liquidity or short-term infusion of cash is the way to handle this, or is there a longer-term issue there with growing the balance sheet to handle it long-term?
I'm reserving judgment on this particular issue. I need to learn more, but my instinct is we're reasonably close to the minimum level of reserves to operate monetary policy, as we said we would get to.
Yeah. How would the Federal Reserve handle another downturn? I mean, we're at, what, 2% federal funds rate at the top of the range. Is that enough room to handle a downturn?
We have tools. We have the rate. We have quantitative easing, which we did the last time successfully. We have forward guidance. So we do have tools. I would remind you there's also fiscal tools, and our government has capacity as well. And you know, when I was taking economics in school, we used the monetary tools, we used the fiscal tools, and the combination of that was how one handled recessions, and I think we've got enough capacity across both of them.
Does the President's comments, just quickly, does that affect you at all in your decision-making, in how you do your job, in the morale?
The biggest thing I've learned in the job is how much focus we get from the political sphere, but also from the markets and from the media. And its incoming is almost constant. And so I think all central bankers have sort of learned to steel themselves to not listen to what they get in the press, but focus on the data and focus on, what our mandate is, which is to do our best on employment and on inflation.
Richmond Federal Reserve President Thomas Barkin. Tom Barkin, thank you for joining us. Yeah, I appreciate it. You heard it here. Manufacturing slowing a little, but consumer spending expected, according to the Richmond Federal Reserve President, to continue going on throughout the rest of the year. Thank you.